So deductible basically means the total amount out of your pocket for that year. So you have to hit that amount before a lot of the benefits of health insurance kick in for a lot of plans. So for somebody, for example, who has a high deductible plan, that essentially means that you're basically paying out of pocket for most of your health insurance and whatever services you're receiving until you hit that deductible amount. If it's 20,000, for example, and then after that is when some of the insurance benefits start to kick in. So when you're thinking about what type of health insurance plan to get for yourself, the biggest question to ask yourself is how much do you consume healthcare? Are you a low consumer of healthcare, meaning you hardly ever, need healthcare services or go to the doctor? Are you moderate or are you high? And depending on which of those categories you fall into, it'll really help you to tailor your plan. Because if you're a low consumer of healthcare, it may make sense for you to get a high deductible plan because that's really only what we call catastrophic coverage. So, God forbid something bad happens where you end up in the hospital, you have a car accident, you hit that deductible very quickly, and then the health insurance kicks in. But for those out of pocket visits, you might have to pay yourself. On the other hand, if you're somebody who has a lot of chronic medical problems or is a high consumer of healthcare, it really doesn't make sense to have a high deductible plan because it's going to deter you from seeking medical care. It's going to mean a lot of cost up until the insurance kicks in. And it also can sometimes limit how much prescription coverage you have as well. So copay is usually the fee that the insurance company sort of charges you to see your doctor or your specialist, and that's usually the paid at the time of the visit. Now, for a lot of people, the copay does not count towards the deductible or towards the annual out of pocket maximum that a lot of health plans have. So it's just sort of think of it like a tax, sort of to go and see your healthcare provider. Now, for some insurance companies, they'll take part of the copay when they're deciding, how much your patient responsibility is, which is the co-insurance. So co-insurance means that you and the insurance company are sharing the cost of the visit. So, if the provider bills $100 for the visit and your co-insurance is 20%, 20 of that $100 is your responsibility. Now, that's in addition to the copay, which is usually paid at the time of the visit. Now, so some people have plans that have a copay and a co-insurance. Some people have plans that just have a copay and the visit is entirely covered by the insurance. In that case, there's no co-insurance with you. And then some people, obviously, those high deductible people have to pay the entire cost of the visit until they hit their deductible. But it's really important to think about copays and co-insurances again when you're thinking about how much you use healthcare, because a copay is sort of like a tax. You're not going to get it back, and it may deter you from seeing your doctor as often. So you want to try to pick plans that have very low copay. And similarly, a co-insurance applies not just to the office visit, but it also can apply to lab tests, to imaging tests, to procedures. And you can imagine that can add up very quickly if you're having to pay some percentage of all of those tests that are being done. The first is make sure you have a health savings account. And again, the best way to know how much of a health savings account to have is to classify yourself as a low, moderate, or high consumer of healthcare. But that really helps you to plan because remember, that's tax-free money that you can use for healthcare expenses. Now, you don't want to put too much money into that HSA because it's usually use it or lose it sort of a setup for a lot of the HSAs. But talk to your employer about what their different HSA options are. But that's a good way to save at least a little bit of money on your healthcare expenses. I think the other thing to do is to explore some direct pay options. So insurance has become so expensive and so costly that a lot of people are now making arrangements with their doctor for something called direct pay, which is essentially asking your doctor, instead of going through the insurance, because the insurance obviously, takes a lot out of the physician's pay as well, can they make an arrangement with you where you can just pay them X amount of dollars for visits ahead of time or at the time of the visit, or however you want to set it up with your physician. And that way you kind of cut out the insurance company or cut out the middleman. So the advantage of that sort of arrangement is that because you cut out the middleman, everybody ends up making, saving money. Both the physician and the patient really come out on top. The disadvantage of that direct pay model is that that money that you pay the doctor may not get applied towards your deductible or towards your out-of-pocket maximum. So that's just something to keep in mind if you are trying to chip away at that deductible before the end of the year. Now, the deductible does reset every year. So the other piece of advice I would have is if you're going to need a lot of expensive or costly tests or anything like that, a good time to get them is October, November, and December, really the end of the year, the last quarter of the year, because at that point you've already accumulated all the costs for the year. And if you hit that deductible, then the insurance kicks in. So you can get in a lot of those tests and maybe pay less for them than you would have to pay for them in January, February, or March. For a lot of people that may have high deductible plans where they have a coinsurance on their labs, or they have to pay out of pocket for their labs until they hit that deductible, they can really get a lot of the routine health screenings that your doctor would order directly through 9healthfair.org at a very low cost. So oftentimes what I do when I go for my annual physical, my doctor tells me that you need, this many tests, is I then go on to 9healthfair.org and see which of those tests I can order through their website. And then of course, once the results come out, I share those with my doctor. And it's a really great way to sort of save some money rather than necessarily going to a commercial lab and paying much higher costs for each of those laboratory tests.